episode number 2. I have a good friend of mine, Aimee Dennis, joining me from Caliber Home Loans and Mortgage. She's kind of a big deal, you guys. She's been in the industry for 15-ish years. Is that right?
Closer to 18, yeah.
18, okay. I didn't want to, sorry for underselling you.
Oh,
she is the, what's your title? Regional sales manager?
I'm an area sales manager.
Area sales manager for Kitsap, Clallam, and Jefferson County.
Exactly.
And responsible for 5 branches across that, and close to 20 different loan officers report to Aimee. So Aimee, without further ado, now that I've kind of pumped you up as a big deal, thank you for joining.
Thanks for having me. I'm excited. I look forward to these Zoom calls now. They're actually my social, hot bit for the day. So.
Yeah, for those of us that kind of like do a lot of business networking and working with our partners, it's kind of weird to be stuck at home all the time. So
it's a whole new world. And now I constantly am telling people, don't worry. And their kids are yelling in the background and they say, I'm so sorry. And I say, no, it's totally fine. I've my antenna taped up in the closet right now so that I can
that's what this dog kennel is for.
Yeah.
When they get really out of control, just, put them in there. Well, let's talk about that, because we're all kind of transitioned to home. How's it been for you personally? I know you have a family with 2 young daughters. How's it been for you personally with this last month of change?
Yeah, it's it's one day at a time. I will say that. My kids have been awesome, most of the time, and some days they have meltdowns, and I'm in that category too. There's days where we do really good, and then days where, it's just a struggle. And I think everybody's in that same bucket. We wake up some days and we think we can do this, it's going great, and then the next day you're like, I can't do this anymore. Why is this happening? So I think we're all, doing that same dance. So we actually, a little bit in advance of the actual shutdown, I moved, the majority of people home. I had some stragglers that just did not want to leave the branches because they're just so used to being, at work, and that's their quiet zone. But they successfully did it. We had them take home literally all of their equipment. So we took home printers and monitors and docking stations and keyboards and speakers and everything that we would have, normally in an office, we now all have at home. And I love my team. They're amazing. Like I said, they fought it a little bit, but then they packed right up, went home, and everybody's been doing really well. And oddly, I have this joke that, once we all go home and work, you're going to see the people that really should be more telecommuters because they do so well in the home environment versus the ones who they're going to go running and screaming, the minute that we can go back, they're going to be the first ones opening up that branch, and getting out of the house. So everybody's different, but I'm really proud of them because we're dealing with lots of financial information, very sensitive topics when we're talking about financial and borrowers. And so, they know pretty much that we're at home. I usually get that question right out the start gate. Are you still in the office? And I say, well, I can be, but, we're opting to be at home most of the time. We're not meeting people necessarily face to face, but I will say we have been doing, social distancing parking lot drops of documentation if we have to get, some things. Most of the industry has moved to electronic type, applications, documentation. We get a lot of people who just email. We have secure emailing. We have portals that they can upload. We can use Dropbox. So lots of different methods to get documentation to a loan officer. But there's still definitely people who just don't have that capability. And, they want to be able to drop off, their thick stack of tax returns. And so we definitely will still accommodate and, meet up with people to get that kind of documentation from them so that we can still move forward and we're not holding anybody up. And lenders are actually classified as essential workers right now. So we are allowed to go and do what we need to do to get the job done. So similar to title companies, appraisers, home inspectors, we don't want the real estate industry to die just because, we're all working from home. So everybody's doing a fantastic job currently. I'm just really impressed. My whole team is lively and good. We have branches, branches ranging from Port Angeles, Swim, Port Townsend, Bainbridge Island, and Silverdale. It's kind of the footprint of where we are. And we run this great team. And some of the fun things we've started doing, which we didn't do before, but we've really kind of come together as a big group because we all can only communicate, via Zoom or via email. And so we're getting some really fun gratitude email strains running around, some great pictures from people's home offices. So I really appreciated just the general feel of my team. They're so positive. It's great. It's really good when you work with happy people, during this type of a situation.
Of course. Yeah. It's funny you mentioned that about how there's some people more resistant to like leaving the brick and mortar building. My father and business partner, he was one of those. And after about 2 days of working from home, he's like, I think I can get used to this. This is actually not so bad. Maybe I'll do this a couple of days a week once things get back to normal, just because sometimes you get in a different mindset. You can be in tunnel vision when you're, in your home office. I know not everyone has the same setup, but it was interesting to hear you say that, you have different people, in different mindsets of, I need my office.
Exactly. And that's, and I have the unique kind of perspective of I travel between the branches. So for me, I actually have always had a place set up at home that I can work in case I need to stay home and do all admin stuff instead of traveling around to different branches. And so, for me, this was easy personally to just transition into it. What I miss is seeing all the faces of, my employees and my coworkers, that face-to-face interaction. We love to eat lunch together. We love to go for walks around the block. And so those are the kinds of things that I'm missing out on. But in terms of getting the job done, it's fantastic. And our team does a lot of volume. We did over 500 loans last year as a team, helping 500 families purchase and refinance. And those are ranging across Clallam, Jefferson, and Kitsap. So it's a lot of work. And I'll tell you, we're busy right now. We are going to probably exceed that number from last year. We're already at almost what we were at. 50% of the way through last year, we've already hit that number. So we are ramped.
Well, that's something I wanted to ask you about. So I will preface this and give a disclaimer. Times change very quickly, especially in the lending industry. I come from a banking background. So what we're talking about today, when this is posted, things will change. So if we talk about rates and numbers and figures, I'm giving Aimee an out here. Things will change constantly and rapidly. So always follow up with your contact. But something I've seen through the insurance side, as lenders, we've seen a ton of refinances because we're getting these changes requests with your home insurance. So their home insurance policy has to be updated to reflect the new loan company or the new loan number. And so we've been seeing just in our office, probably on average, close to 10 a week that are coming through on it's mostly refinances. So yeah. Can you talk to us a little bit about, you mentioned you're on this huge uptick for 2020.
Absolutely.
Give me a state of the market and state of the industry for home lending.
Yeah, I will. Did you hear rates went to zero? That the Fed cut rates to
No, I can't keep up with the news right now.
Yeah, so there was a lot of media coverage a couple of weeks back that the interest rates went to zero. And so that's the federal funds rate. I think some people got overly excited, and I did get massive amounts of phone calls, texts, emails asking about the 0% interest rate. So the differentiation I want to make is that the federal funds rate is the rate that lenders can borrow money from to turn around and extend to consumers. And so we have a markup. There's always going to be a markup. That's just the reality of the situation. We can't take a 0% interest rate and sell it to the consumer, because then how do we make money? Most lenders are not charging exorbitant fees. And so the fee that you see oftentimes is the origination fee or the loan fee. That goes to help cover some of the hourly staff. But there's just so many components to this. We have, from the beginning, a loan officer working on it, then an assistant, then a processor, then an underwriter, then a funder, all the way through. And then somebody post-closing that's, uploading everything into servicing and then working with that borrower going forward for making payments. So there's a lot of human involvement in the loan process itself. And that costs money. All these people are having absolutely, livable wages. Caliber pays well. We have great talent. And so that's just something that we're willing to pay the price for. So that means then that, as a lender, we have a cost to manufacture that loan. So, we might be able to borrow it at zero, but the average cost of manufacturing for a loan for a lender is anywhere from 2 to 3%. So really that means that the rates that you're seeing on the streets are not zero. They're definitely marked up. I love to look at Freddie Mac's primary mortgage market survey. That's a place you can search. And if you literally just Google Freddie Mac primary mortgage market survey, it will pull up a great chart. And what it does is it takes a sampling from across the United States of all the different lenders. And it says, here's the national averages. This is approximately what people are paying. And this is updated every Thursday. And so you can go on that site and you can just see what it was. I pulled it this morning, and the 30-year average is sitting at 3.33%, which is it. Oh my gosh, that's incredible. That's such an interest rate. And that is with 0.7 points on average. I won't go too much into paying points, but it means that you're paying a little more than just the base loan cost to have a little bit of a lower rate. So that is sitting kind of right in that low 3 spot. And then a 15-year is sitting at about 2.85. And again, with 0.7 points is the average that the consumers are paying to get that. So again, just amazing. I mean, my first mortgage was in the eights. And so to see it come down this low is just, it's shocking. I'm dating
Don't age yourself now, Aimee. Don't
myself.
tell it. You don't need to tell us that. That's like the people that say like, oh, I had a 17%, loan
Right?
back.
No, I
back
didn't have
after.
the 12 and 17 that, my parents had. So that's good. I feel like I was blessed at the age.
Now, as a novice, I know quite a bit about it, but points make sense if you see this as a lifetime home and you're going to be there for 7, 8, 10, 20 years. Probably makes the most sense to pay up front and buy down the rate, right?
That's exactly right. And that's a great way to describe it. And so, and I do let some people who, maybe tell me they want to be there a little shorter term. Sometimes they will still pay points, but we always go over that exact topic and kind of, really does this make sense for you to extend money? Because if you're only keeping it for 5 years and it's taking you 6 years to earn back, what you had paid for points, well, then that's not really the best scenario for you.
Yes. That means my banking education still
You
paid
did.
off. I still got it. I'm on my toes. Obviously, right now, since we're all locked down, there's a lot of talk about the COVID relief and rates and all this sorts of stuff. Everyone's looking to save money. Something I've seen with our insurance companies, they're doing refunds. I've seen credit cards doing stuff with, will not do interest in this. Can you talk to me? I've seen some of your content and I've done some reading about what home mortgages are doing. There's something called, what is it, forbearance?
Yeah.
So educate me on that, because that was the first time I'd heard this.
I will. Forbearance is the hot buzzword of the day, or for the season, I will say. It's hot on the docket. So I'm going to talk about forbearance, but really quickly, let's talk about what COVID has really done to the industry. So with this whole topic, and this ties directly into forbearance. So lenders are nervous right now about liquidity. And so this means that if we go out and we extend money that we have, say to you, and we're going to give you a new home loan, we need to be sure that you're going to pay that money back. And if you don't pay it back, and we happen to be tied into Freddie Mac and Fannie Mae, which a lot of lenders are, they can ask you to basically buy back that loan and carry that loan forever. So that would be like if you write insurance policies for other companies, I'm sure. So you're saying, okay, I'm going to get you this policy in place. So that's kind of what's going on. We are following Freddie Mac and Fannie Mae guidelines on what they want to see with loans, while we're trying to negate the scary issue of forbearance. And so Freddie and Fannie are doing things that look like a conservative move to protect the market. And so I'm seeing all sorts of things happen. I'm seeing lenders lose programs. I'm seeing credit score minimums increase. I'm seeing more documentation for self-employed borrowers. People now have to certify that they're not affected by COVID and that they are still working. So that, as you can imagine, that creates a lot of paperwork on behalf of the lender that we normally wouldn't have done. We always followed a fairly standard system based on what Freddie Mac and Fannie Mae asked for in terms of documentation, but now it's over and above. So we're calling these COVID overlays, is what I like to call it. It means that here's what Freddie and Fannie say, here's the COVID overlay over the top, saying now we have to be even more conservative because we've got to protect the assets of the money source, essentially. And what the fear is that if we originate a loan today that goes into forbearance, let's say that the person never makes their first payment, we now have to carry that on our books forever. And it's not saleable to Freddie Mac or Fannie Mae. So as you can imagine, that scares a lot of lenders to their core, because a lot of people, they're not even lending their own money. They're lending off of warehouse lines of credit. They're lending, or they're a smaller bank. We have a lot of local small banks in SWIM. They're lending their own money. So they're going to feel slightly nervous when they look at this big picture of, do we want to give a bunch of loans right now? And now this is paired up with, we have the lowest interest rates in history. So there's a massive volume and request coming in, yet we have to work around these odd parameters that we're now seeing. So let's talk about forbearance, because that is the big deal. So you're seeing servicers, and a servicer, when I mention servicer, that's whoever you make your mortgage payment to. So that might be the person that you got your loan from, or it could have been sold to a larger bank and now you're paying directly to a bank. So whoever your servicer is, they're the ones that are watching this forbearance situation. So when a customer goes into forbearance, the mortgage company, oftentimes the servicer, has to continue to cover their payments on that loan to Freddie or Fannie if they've sold the underlying loan. So even though the loan was sold to Freddie and Fannie, the servicer still collects the money. So let's use Caliber as an example. We sell to Freddie and Fannie oftentimes. We also can portfolio in-house, but we opt a lot of times to just sell to Freddie and Fannie because that's where the money's at. And so they have their rules. So all this is kind of changing and morphing, and we're getting more rules added on. And now loans that we thought were saleable maybe aren't saleable because a customer had a decline due to COVID. And so you can see this goes into a big rabbit hole. So everybody's nervous about this. So forbearance is the option that you can defer a payment. But what I, really want to put out there to the world is that it is not mortgage forgiveness. It does not mean that money is going away. In fact, it's far worse than what most people actually think. And I, try to tread lightly on this topic, because if you need to go into forbearance because you can't make your mortgage payment, you should. This is a great option for you. If you do not need it, or you have any other method to be able to pay your payment, you should opt for that. And so again, not mortgage forbearance or forgiveness, it's actually forbearance. So forbearance just literally means pay delay is the best way I can describe this. So let's do some quick forbearance math. So James, let's say that you have a $2,000 a month mortgage payment, and you call up the servicer and you say, hey, I'm having really hard times. I'm slow. I'm laid off. I can't pay this. And they say, okay, how long do you need to have? Do you want 3 months or do you want 6 months? And you say, you know what, give me 6 because I'm just really nervous about this and I need more time. And so they say, okay, great. You're in forbearance, no late fees. You don't have to pay us during this time period. You go right ahead and take care of your family. It sounds good up front. But the issue is that 6 months from now, they're going to call you and say, hey, James, we're ready for our $14,000 back. And you're going to say, excuse me? And the answer is you've deferred 6 months of payments at $2,000 per month. So now we're up to 12. And then you've got the current month due at the end of that time period, which is that 7th month. So now you owe them $14,000. And you might say, well, I don't have that. I have been laid off. I haven't gotten any money. How can I do this? And then they say, well, now you're in violation of forbearance. And so that means, so forbearance is actually not a negative credit situation for a borrower. It is literally a pay delay. Like, give me a few months and I'll get you the money. If you get to the end of that term and you don't have the money, there's where the problem happens. So now you have not completed forbearance, and now the servicer has to work with you to figure out how are you going to pay that back. So oftentimes they will work with you for a loan modification, which looks like, wrapping some of that into the current loan, changing your payment, adjusting interest, doing whatever they can to try to keep you afloat without you going through a foreclosure. That's the goal, is don't foreclose. So what can we do in the interim to try to stop that from happening?
So I think, from the consumer side, a lot of times when you hear this, you think, oh, great. It's, at least the way I would interpret it without being explained to that, is that you're just kicking the can down the road for 6 months. And so instead of my payoff date being 2030, it's the middle of 6 months later. You kind of think that it's just giving you 6 months off, but really it's just delaying a big balloon type payment.
Exactly. I mean, there's the big giant message that's missing from all of this. Yes, we'll let you pay delay, but you have to pay it back at the end, and it doesn't just automatically get rolled. Now, what I will say is that all servicers are going to be different. So we have guidance. So all this stems back to who owns that underlying loan. Is it Freddie Mac? Is it Fannie Mae? Do you have an FHA loan? Do you have a USDA loan? Or do you have a loan that you got maybe from a local bank like First Federal, who was carrying the mortgage and they didn't actually sell it to Freddie or Fannie? So these are all different sources of where, where that underlying loan is. And each loan type is dictating its own, resolution to this. So while FHA might let you modify the loan and move payments to the backside without issue, the conventional loans may not follow that guidance. And if your loan is held with First Federal, then it's up to them and what they want to do with it, which they may decide to roll it to the back for you. And that could be something that happens. It's just not across the board. That's the problem. And so you really, if you are considering a forbearance, the best thing you can do is talk to your servicer about what the ramification is if you don't pay. So if you say, I may not have that money at the end of this, what will my options be at that point? Because if you go into a loan modification or you're not able to pay, and you can't even modify it, foreclosure processes could start at that point because you're really far behind and you have a lot of money that's owed back to the servicer. If you go through a loan modification process, that's looked at as a negative credit event. So now you are not going to be able to go obtain a new loan. So if you go into a loan modification and then 6 months later you decide to sell your house and you want to buy a new one, that most likely will not be an option for you. And so what's the problem with that is obviously you can see this creates a long-term effect across the whole, our whole economy in that sense, that anybody who needed to use this, even though it wasn't caused by them. So the upsetting part, I think, for lenders is that we love to do loans. We want to help people get houses. We can't guarantee that we're going to be able to help somebody, today that says, I can't pay my mortgage. They're not even eligible to refinance once they go into forbearance. So if you start forbearance now, and then 2 months from now, you say, I'm just never going to be able to dig myself out. Can I please pull out 30 grand so I can pay you back and do all this stuff? The servicer is going to say no. And for kind of obvious reasons, you've told them you can't pay. So now they do not want to give you more money. And so that is really, that's life after forbearance is, you basically said, I didn't have enough money. And again, this is not because, your business didn't do well or the economy had slowed down, just because we were having, business cycle, recession. None of that is true. It's all caused by a pandemic. So it's just an odd situation to be in.
Yeah.
But the facts are still the facts.
So the devil's in the details, just like they would say of any sort of contract. The easiest advice you're giving is whoever you're currently using as your lender, if you're interested in this forbearance, call, find out, ask the questions, do your homework, because as we probably all know, if it sounds too good to be true, it may be. So you need to find out what, the ramifications are.
Exactly. That's all. And I just say that's always what I tell people, ask the questions. And I've done a lot of, kind of what I would call, mini counseling in that sense, where a borrower will call me up and say, hey, Aimee, I'm nervous. This doesn't look good. And, I usually will talk through the different angles with them. Do you have a 401k you can pull from? Do you have, which, none of these are great options for people. They don't want to pull from other stuff. They don't want to have to sell belongings to be able to make a payment. We are just unfortunately, dealing with something that is unprecedented. And so that's just what we have to look at doing. And again, if you are in the process where you were maybe pre-approved before and you were looking for homes, make sure that you can really make that payment. You're going to be asked to certify that when you close the loan. And one of the issues is that based on the dates of the CARE Act, you may not be covered for all of the forbearance relief based on the fact that you took the mortgage out after you knew that this was all happening. So now borrowers are literally having to certify that at closing, that they understand that, this is going on and that they are not affected and that they are able to repay that mortgage. And again, because servicers are nervous, they don't want to carry a bunch of loans that people can't pay on. So it's just, it's different times.
So I got to jump topics here to make it a little less heavy, okay?
Yeah, let's do it. I'm ready. Let's move past the Debbie Downer forbearance.
What have been some of the craziest things you have found your guys' household eating during this lockdown? Have you guys been, making microwave hot dogs left and right because you're just tired of cooking? Where are you guys at now that we've been locked down for like 5 weeks?
Well, my family actually is semi-lucky because I was the one that was working too much and we were eating out a lot and doing a lot of, frozen pizza and that kind of thing, just because, well, I'm not the greatest planner when it comes to food preparations in my household. I can work a lot, but, so the amazing part is my kids have really risen to the occasion. And so as one of their, what we call their enrichment session of the day, I have them doing some core math and things they're supposed to do, but then I say, okay, for enrichment, they can choose dinner prep as their choice. And so my oldest just loves to cook. So she's actually been helping to plan the meals. And so funny story, I'm losing weight because I don't get to go to all of my favorite restaurants all of the time. I try to do takeout as much as possible. But, with people at home all day wanting to cook things, we're ending up with some weird stuff. I mean, you're right. Some days it's like they serve me dinner and I'm going, I don't know what I'm eating right now. It's the weirdest conglomerate. One night I had scalloped potatoes, sliced apples with peanut butter, and shrimp. And so... But I mean, hey, you
covered a lot of the food groups, right?
And I couldn't complain. I mean, it was fantastic, and I didn't have to do the cooking, and I was happy that other people did it for me. So there's that. How about you? What are you guys eating?
We've been doing pretty well. I mean, the kids' always top 2 requests are cheeseburgers and pizza. So we've had a lot of homemade cheeseburgers and pizzas, and we've really, because I'm fortunate enough to work from home, we've really enjoyed the downtime. We were just at the start. I just started coaching Little League for my 2nd year, and Sarah was going to be coaching soccer with our other son, Bennett. So we were just 1 week away from doing the running between 2 sports, 2 different times, practices, all this. And then when the lockdown happened, it's given us this like unprecedented amount of free time, unscheduled time. Like, we've got the tent, it's pitched upstairs, and the kids are pretend camping upstairs right now.
I love it.
I got bored and we spray painted a football field in my backyard because we're doing nothing and we want sports to play. Like, we need sports. So it's been a weird thing to try to, I'm always looking for positives and to try to latch on to. I think in 10 years time, when our kids are in high school, I'm going to look back and go, you remember how cool it was when we had these few months where we just like saw and did nothing else but play with each other? Because I think at some point in time, they're going to be off to their own thing. And so, food's been fun, play's been fun. It's, it's been tough to see what's been going on, but fortunate enough to be able to say that we're all healthy and doing okay.
Agreed. And I think that I do the same. I'm looking for the silver lining, and I read something once that really, it kind of gave me that piece where it said, here we are, I think a lot of us are worried and we're feeling like this is a nervous time and we worry about what will the impact on our kids be. And I read something that was written, hypothetically by a student, 10, 15 years from now in college that, says, hey, mom, I'm doing a paper on, that time period when we had COVID and we were quarantined. And I'm going to say, oh yeah, that was a really, most people will say that was a stressful time and it was just a whole different thing. And then the kid's going to say, that was the best time of my life. I got to jump upstairs and inside the house. I got to make dinner every night. I saw my parents together every single night or whatever the case may be. There is a silver lining to this. And people do, I think, have to work through that. There's days where I think that, I'm questioning why I do some things at all. And I didn't do that before. I was so busy running around, and I literally said the other day, I'm kind of loving not having sports with the kids, like what you said. I mean, they're getting so much exercise because I have to kick them out of the house every 5 seconds. But not having to run to volleyball and soccer, and then again, all my already strained dinner plans go out the window, and just that constant rushed feeling. So I hope that as a society that we all take a step back and say, yes, we need to get back to work because people need their income back. But on the flip side, cherish this time that you have with your family. And, even I think people who have a strained, family life are learning new ways to cope. And I think anytime that we can learn, we can adapt our brains to start doing something different and becoming better. And really, when this all opens up, let's pick and choose what we go running right back to. I know that I'm loving having dinner with my family every night. That's going to be a new, really more important aspect to me because I won't want to give it up. It's been too great. So there's just things that I think, just in general, we're going to see the workforce shift. You're going to see those employees that we're going to decide, they do better off telecommuting. There's going to be less crowding in areas, that we're used to seeing. So just as a society as a whole, I'm sure you've seen this stuff on the internet right now. I'm kind of to switch topics, but about these sea turtles that are, mass populating all over beaches, and they're able to actually, some of these endangered species are they going to pull out of it? I mean, are we actually are they going to reproduce enough to where they're no longer endangered because we got out of their way? That's an amazing thing to look at.
Pandemic equals endangered species aphrodisiac, huh, is what you're saying?
Exactly. I mean, there's places, I think in India right now, where they can see the Himalayas and they haven't seen them in 40 years.
Yeah.
Because of the smog. I mean, oh my gosh, that kind of thing just gives me goosebumps. And I just think maybe in a weird way, we were all supposed to do this so that we could go home and remember, what are the important things? Thinking about the earth instead of being, mass consumerism and, running out all the time, too busy, like, chickens with their heads cut off. We have to be very methodical. We have to think through the days we're going to go to the grocery store. We have to plan in advance. We have to slow down. We have to sometimes sit with a child, in the middle of a workday and help them cope with, the stress that they feel. There's just a whole lot of silver lining to this, that while it's uncomfortable, that feeling brings about change, which oftentimes is better than what you came from. And so I'm going to be with you on this. And I'm saying that we're going to look at this from the positive standpoint. And I really need my restaurants, to go back to where, to be able to have their doors open. I want to go downtown and walk around, and, I love going from my branch down and getting, cupcakes and then just kind of stopping down along each store. Yeah. I want to just see their doors open. I want everybody back to work. And I think we all feel that way. And it's going to come. It'll be slowly but steady. It appears everything's, moving in the right direction, and we'll maybe see some of this ease up soon. So I can't wait till the day we can, be back at the soccer fields. But in the interim, I'm going to learn from this experience and hopefully make good choices going forward.
Well, I've taken quite a bit of your time. To summarize, we've learned about forbearance and can be great, but you got to know what your options are. We've learned that zero rates don't mean zero cost. We've learned that working from home can be fun and stressful all at the same time. We've learned that you've eaten scalloped potatoes and shrimp, so that's an interesting with some apple slices. I may proposition my kids with that.
Right.
Any last words of wisdom or anything you'd like to say to this hopefully growing crowd at the Clallam Corner?
Yeah, I do. And that is that, hey, it's the real estate market is open and active for business. So we would love to do pre-approvals. Even if you are temporarily laid off right now just due to COVID and you're going back, now would be a great time to sort of get your finances in order, have a conversation with a loan officer. I'm happy to recommend some. I've got some great loan officers and branches in Swim and Port Angeles that's close to everybody in Clallam there that can chat. Now's a good time. Get your credit pulled, look at your scenario. I have a feeling that while everyone's quarantined, you may see a lot of houses pop on the market in the near future just because people all of a sudden realize, you know what, I don't want to be stuck in my house ever again, and I want a new one. So you might see some stuff start to move around in that instance. I also think that we're going to see a wave of people coming from possibly Seattle when they realize that they can telecommute. I mean, I think we all need to brace ourselves for that. And so if you are a Clallam County resident, my vote is, take a good assessment of where you're at right now. Do you think you may want to move? Do it before everyone else does it, is my tip there. Realtors are absolutely essential. They're out there. They've got great face masks. I'm loving seeing them online doing their social distancing showings.
Yeah.
So it's still totally a time for you to move forward. Don't be hindered. I mean, you're writing insurance policies. We can get this job done easily and from home and happily. So we'd love to work with you on that if that's something that you're wanting to look at. And, everyone just hang in there. We're going to get through this. This too shall pass, and we'll be right back, kind of looking at this like it was the blink of an eye, a couple of years from now.
Well, very kind and motivating words. Appreciate your knowledge. I've learned some stuff today. Hopefully other people have as well. And thank you for being one of our first couple of guests on the show. I appreciate it.
For sure. And thank you for doing this. I love this. This is a great way to kind of figure out what people are doing and just do some education while we're all kind of stuck at home. So
you love it now, but wait till I start editing it, make it sound like you've said something else. And right? I promise you, I can get you a 0% rate. What about that?
Yeah, there's no 0%. So let's remember that. But the rates are fantastic. The primary mortgage market survey says now's the time to buy. So
awesome. Well, if you guys are watching this and you think that you would be an awesome guest on the show, or someone that you think would have good information to share, please make sure that they contact me below. Happy to help and spread some good news throughout kind of this chaos. So again, Aimee, thanks for joining, and much appreciated.
Absolutely. Take care.